Hello, welcome to the week ahead video with me, David Madden. Before we take a look at the major events of next week, let's just take a quick wrap up of what's happened in the week just gone. We have seen a decline in stock markets around the world. This here is the US30. It fell last week back to a level last seen in kind of mid to late July. This is on the back of fears that the Fed Reserve might look to taper its bond buying scheme sooner than expected. There's also concerns that the Chinese economy is slowing down, and in addition to that, there's also fears in relation to the tougher regulation being imposed out of the Beijing authorities on companies operating within mainland China. So all these stories together put pressure on global stock markets, hence why we saw a drop in the US30. There was also a move to the upside in the US dollar, partially because the chatter about the Federal Reserve potentially tapering its bond buying scheme later this year, that helped the US dollar. To an extent, the US dollar also benefited from the flight to quality play as well, to an extent, given that there was a lot of uncertainty in global stocks. So now that we've covered the major events of the week just gone, let's take a look at what we can expect from the week ahead. At the back end of the week ahead, we have the Jackson Hole Symposium. So traders are going to be listening out for any updates from central bankers in relation to how their respective economies are performing, in particular that of the US, because for the time being, of the kind of major economies around the world, the US appears to be kind of in the lead when it comes to potentially tapering or tightening its monetary policy. Now, any kind of updates from the US central bankers are going to be closely listened, because, as I mentioned, we have seen a stronger dollar recently. We have seen weakness in stock markets. Also next week, we have the preliminary reading of US GDP for the second quarter. Economists are expecting it to be unchanged from the advanced reading, which came in at 6.5%. And on Monday, we also have the manufacturing and service PMI readings, the flash readings from the major economies of Europe and the US. So here are the figures from Germany, France and the UK, and as I mentioned, the US. Traders are really going to be listening out for the recovery story. By and large, the US and the major economies of Europe have rebounded nicely in the last few months thanks to economies reopening, but there are some signs that the levels of growth being achieved, as impressive as they are, that they've dropped ever so slightly, and this is going to be feeding very much with the recovery story. As I mentioned, over in the US, there's talk of potentially that the Fed trimming its bond buying scheme later this year. Strong numbers in terms of manufacturing and services could add weight to that argument. Conversely, weak numbers could suggest the US economy isn't strong enough to warrant tightening monetary policy just yet. So this is what's all going to be in focus. Over the overall kind of story in relation to how the global economy has been very much in play the last few weeks and months. Taking a look here at the US30, it wasn't that long ago we saw the US30 set yet another new all-time high, but since then we have seen a series of lower lows and lower highs. As I mentioned, the recent decline, the recent low seen in the US30 were back to levels last seen in mid to late July. Although the market has rebounded a little, it's only recouped a small bit of the ground that was lost recently. While the US30 continues to hold below these three simple moving averages, it's likely the near-term negative trend will continue. A break below this region here at 34,565 could see target this zone here at 34,360. We can see here this metric back in mid-July, that general zone provided was a consolidation zone back then, so traders might be keeping an eye out for that general area. We have seen a recent rebound in the US30. It's the lows that were set recently. If the rebound does continue, resistance might be encountered from this simple moving average here, which comes into play around just north of 35,000 and in a 35,024. And if you do break above that, this region might be retested at 35,358. We were talking, I've mentioned the stronger US dollar because of the chatter in relation to the Fed Reserve that they might be tapering their bond buying scheme later this year. That put a lot of pressure on euro-dollar. The currency pair recently fell to its lowest level since November last year, which really highlights how bearish the market is. While it continues to hold below these three simple moving averages, it's likely the near-term negative trend will continue. A break below 1 spot 1665 could see a target 1 spot 1600. If we do see a rebound in the currency, resistance might be encountered from this zone here in around 1 spot 1740, and a move beyond that could encounter resistance from this simple moving average here at 1 spot 1763. Even though we have seen a stronger US dollar recently, we haven't had any major moves in either direction for gold. Gold seems to be has been trading in a relatively small range lately. But it's worth noting that the broader, more medium-term range upward trend is still very much in play. Gold is kind of caught between, on one hand, the stronger US dollar, but also gold sometimes benefits from the flight to quality play as well. So I think that they're the reasons why gold has been trading in a reasonably small range. While it holds above this simple moving average here and the lows here, the recent kind of obvious low of last week in around 1774, if you could hold above 1774, it's likely the more medium term upward trend will continue. A move higher from here could see a target 1801, and a break beyond that could see a target 1831. If you do break below 1774, we could hit the target 1741, or perhaps even as low as 1718. That's all from this video. Thank you very much.
Thank you.